This is our Forex blog for November 28th, 2012. And like we do most days, we start with our build your own trend currency meter and find the strongest currencies versus the week. We statistically compare every currency to every other one on multiple time frames using multiple different tools. Some of them measure the direction, up or down, that every currency is moving versus the rest, and others measure the intensity of the trend compared to the 20-day average intensity for that time of the day. So if, for instance, the euro is going down against 70 to 100% of pairs and doing so with incredible intensity, you're going to see red, and it's going to be at and above the 80 level most likely. And how you use the currency meter is when you see a lot of weakness, trends don't go one way forever. Look for the counter trend phase of usually 30 minutes to an hour and a half. In this case, there is a little bit of strength right here. That's not enough to really look for a sell again. You have a little bit of weakness, a little bit more strength, and at this point, 330, you can look to sell the euro against whatever has the opposite pattern in a strong one. Let's scroll this back so we can see all of them at the same time. It appears that the New Zealand had a lot of strength. It didn't have that much of a pullback. Actually, let's go forward a little bit. This wasn't enough of a pullback for the euro. Alright, so at this point right here, we're looking for the euro to go down. And you can see the New Zealand's quite strong. It had a little bit of weakness, a little bit of strength. That previous momentum's likely to continue. The yen looks pretty good too. We had a lot of strength, a little bit of weakness, strength, less strength than before. The strength's coming back. The euro yen coming up to 4 would be a great one to look for a sell. So this is 4 o'clock right here. You can see the pullback here. And one of the things you can do that help you time your entries, when you use the currency meter first, like I explained, go to our moving average option. And it's not a regular moving average we want to use. We want to use our digital signal processing based 5-period moving average shifted 2 bars to the right. I like to make it 2 pixels thick so it stands out a little bit more and make it white. And so when you spot a currency that has pulled back, this moving average is very fast. It makes a great timing tool. 4 o'clock's coming up here. It breaks down. You'd be short somewhere around 80. You always want to draw your fibs on the last wave to get an idea where your profit target is. Notice where it went. You're short. And you could get out of this really close to the 105.57, somewhere around here. You can see it was only 3 pips away. Our containment band's there. It was coming down. You're watching it while you're in there, and you made about 18 pips on that trade. And that's how you use it. Now, if you were watching this later in the day and you spotted, let's hit the minus key to zoom out a little bit. We want to see where the highest high and the lowest low is to get an idea of where the fib targets are. This 4 o'clock trade right here was at the 38% retracement after having seen it failed at the 61.8% fib. So, that added to the probability here. And then it came back up again. This sell signal here is a little bit underneath the fib area. So you might want to do a smaller lot trade. Sometimes when it's really close to that, I will look at the real-time momentum. It's got pretty significant strength right there. You might wait when you get a sell signal for the bar to close underneath the displaced moving average. And so instead of being short here at the low, this bar is 75, you're short here when it breaks the low, maybe at 79. Put your stop right above this bar's high, and you're watching it bar by bar once you're in the trade. That's how I manage my trades. I want to see and make sure that the real-time momentum is going from strength to weakness, or at least less strength. So that, last bar went up, it had a lot of momentum on it. I'm a little nervous right here. I'm going to watch the next bar or two like a hawk, and if it really doesn't go my way, I'm going to try to get out of the trade with 5 or 6 pip maximum loss. Alright, so it's kind of going sideways here. This is the first bar down. I'm going to move my stop down so it's only 4 or 5 pips max away from the entry at this point. You always have to be aware that the previous swing low is a likely profit target, and if it breaks through that, you have a fib target of from here to here, or also from here to here, or from here to here. So once it starts going down, you want to draw your fibs on there. It has to break this low here before, you know, the fib targets are going to come into effect anyway. So it looks like I might have got stopped out there. Sometimes these chop around a little bit. And if it can't get above that 38% fib area, I'm going to get right back in it when it breaks this low. Or if it goes sideways right here, I will sell again as well. Usually I wait for a couple bars. So that's enough for me. I would sell it when it goes 1 pip underneath this low, because it had every opportunity to go through this high and it couldn't. And so that's very significant. Okay, short again. My new stop is going to be right above this high here. Notice the most momentum that we've had since being in the trade. That's positive. Another explosive down bar. And if I took a loss in the other one, I would tend to get out of half my trade here, and then I'm moving my stop down to break even. Now this is enough momentum that it should come down another 6-7 pips and hit the low here, and if it breaks that, then you're going to have a big win. Alright, so it's had a little bit of a pullback. I'm going to move my stop down above this bar here, and if it comes back down and can't get underneath this low, I'm going to get out of the second half. Alright, that's a pretty substantial, you know, you can see it violently went down. This popped up with more weakness. Should go through this low, but if it doesn't, I'm out. Alright, so I would be out of this trade somewhere around 63, 64. You know, that's how you handle the trade. Now at the low, I'm not going to sell the low because that's always a risky thing to do. So if sometimes it goes sideways like this and breaks down, I want to wait for at least a 3 to 5 bar pullback. You know, and so you can see it went down here, then shot right back up, and that's what it oftentimes does. I want to have a little bit more of a pullback first before I get into a trade. Now, if you're willing to have wider stops, you can certainly sell the lows after 30 minutes to an hour. But there's so many good trades when you watch all the pairs that there's no need to really take risky trades anymore. In the past, I would take these trades and I'd get stopped out a lot. If you are going to take a trade at the low, make sure that you spot a rectangle pattern, a very tight high minus low of maybe 12 to 15, 18 pips max, and it should be at least 30 minutes to 2 hours. This started around 6, and you can see the breakout happened around 7:45. So it was about over an hour and a half of sideways movement here with a lot of weakness. Other currencies, other euro pairs are weak, yen pairs are strong, but this one's found support here at the lows. Now, if you do sell those, remember the profit target is real close. Since it's already gone down significantly for the day, you could draw your fibs off of this last move, and this is where your profit is. So I don't like to sell the lows, especially in cases like this where 57 is my entry and my profit's only 13 pips away. It doesn't make sense to risk 8 to 10 pips to only make 10 to 12 or 15 pips max. You know, I prefer to get short at these where it has a good chance of going 30 or 40 pips your way. So let's scroll through this a little bit. You can see the yen was obviously the strongest one. The New Zealand was also quite strong. So the euro New Zealand would have been a good one to be selling until, you know, later in the day. And on a 5-minute chart, this is kind of a choppy pair. You might want to, on pairs that are kind of choppy like this, go to a longer time frame chart. Draw your fibs off the last wave, especially for wider currency, you know, pairs like this. If it comes up and goes sideways at the 38, and I prefer the 50, get short, put your stop above here. If you really want to be safe, you put your stop above here, and notice where it went, right to the 1.382. And you use the currency meter to identify this pair. The New Zealand's strong, the euro is weak. Now the Swiss was also weak because it tends to be pegged to the euro, so sometimes it's a tad weaker or stronger than the euro, but it's always strong or weak like the euro is. The New Zealand Swiss is going to be one to buy. And as you can see from this previous up move here, notice, oops, I drew that wrong on here. Notice this one touched the 50%. And that's why if you are going to get in here, you can't just put your stop underneath the low. It's ideally, to avoid stop outs, would be right here. Sometimes I will get into a small position here, get into a much bigger position here, and once it goes my way, I'm moving my stop up to break even. If it comes up to the high here, you might want to get out of half. And it's not a coincidence that where the high went. Notice if you drew another fib from here to here, look where the market stalled. Fib targets, fib retracements are key, and using those and seeing our FX trade signals right near them can dramatically help you trade. Now, the dollar became pretty strong at 6, and the euro was weak, the pound was weak. So up until 6, you could say, or I should say from 6 to about 10 until the weakness comes in, you got some nice euro dollar sells. Let's take this stuff off here. I always like to kind of see where the trend lines of the day is going. In this case, this one was one that was kind of chopping around. It spent pretty much more of its time underneath the hourly moving average than above it. The daily trend's down, the monthly trend's down, the weekly trend's up. And for those of you who are wondering why we changed our currency, I was basically sick of all the new traders asking me, well, if the real-time trend is slightly up or slightly down, and the daily trend's down, the weekly trend's up, the monthly trend's down, which one do I go with? And that's why I added the option of our currency meter to add in the weighting for the daily, weekly, monthly. I only give 4% weight for the monthly, 13% weight for the weekly, and 18% for the daily. This avoids, the old currency meter would show the real-time momentum in histogram form on the top, and then have daily, weekly, monthly trend underneath it. I found that it confused new traders, as you can see on the individual chart here. I like chart patterns. This one's clearly trending down. Let's bring up the euro-dollar longer-term chart just to show you something. This was actually an area that I was looking at buying last night, and I had a small position because it didn't hit my ideal area. But this was actually called a Fibonacci cluster. The move up in the euro from the lows to the high. Notice it pulled back right near the 38% level. And if you go down to, let's say, a 240-minute chart, and you draw your fibs, or I'm sorry, let's go to a 30-minute chart. If you draw your fibs from the high to yesterday's early low, notice you have this Fibonacci area right here. We zoom out a little bit and find the lows down here again. Where you get multiple Fibonacci areas, and I do this every night from my own trading, and I set alerts to be had, and a lot of times I just put in trades to be identified. Notice the 38% retracement happens to be right near the 1.382 fib target. This is a phenomenal high probability place to buy on a dip when the longer term trend is clearly up. And that's why the weekly trend here is up, the monthly is still down. As this is coming down, notice there's a lot of weakness here. You might be a little hesitant to buy. When it comes up, comes down again and forms a double bottom here with only one bar of extreme weakness. And this next bar here shows less weakness, and it's an up close bar. It's a relatively safe place to risk, literally 6 to 10 pips. And most of the time, your initial stop is not what your loss is going to be if it doesn't work. As you scroll back and watch this, when you go long, when it goes 1 pip above this bar's high, notice this got a little bit less weak, starting to go up, a little bit of strength coming in here. I'm moving my stop in a very short amount of time to break even. And by waiting for a double bottom, you can do a lot more lots right here. Let's say a lot of times at the lows, I will scale in 1 lot here, 2 lots there, 3 lots, 5 lots. Usually the biggest one addition of lots to scale in I would go is 10. But I like to have 6 to 15 full lots, on the scale in position progressively. So usually if it goes 6 or 8 pips my way, I'm at break even. This trade is going up. This is one of those things where, because of the double bottom, I would, for example, maybe put a 5 lot trade on here, where with the desire to scale in a little bit below that, because we're at a major Fibonacci cluster area, which in my experience has about an 80% success rate. So I'm willing to get a little bit more aggressive on type trades like this, looking to make $3,000 to $5,000 on a pop. So you can see, and usually when you find a low like this, it's going to move up at least in 2 waves. So that's the first wave up. I'm not very happy with the strength here. All right, so now here we go. And this is the trend line from the highs here, so it might stall there. And this is the previous day's low. So more than likely I would be getting out at least half my trade here, and I might use this or the trailing stop as the second half. So a lot of strength came in. If it does go up, my exit for the second half of the position would be probably the maximum of 29.36 right here. You know, if it goes above that, 29.40, the value area low is up there. 29.45 is the maximum. So I would have probably got out of this trade right here. If it breaks through this level here or pulls back, you can always buy it again because it is likely to work its way up here because it was such a significant level. So this buy trade right here from our signals, it goes 1 pip above that high, we're in it again. All right, we're long. This picked up with some strength. You know, our stop's already way past break even. All right, notice the momentum here. If there wasn't this much momentum, I would get out of half my trade here. We'd make 20 pips on that trade. All right, if it goes a pip underneath here, I'm going to get out of half. All right, so I'm out of the first half here at 25, made about 14 pips. And usually if it goes back up like this, I will put my stop from break even up here underneath this bar's low. All right, and notice, you know, there's not a whole lot of weakness, but my stop's still there. All right, it doesn't look like it's working, so I'd be out. And it finally took off a little bit later. Figures, sometimes that happens. Now this is, like I said, the area where I expected it to go eventually, the maximum high. If you wanted to do a counter trend trade there, it's relatively safe. Your profit target anytime you do a counter trend trade is 38% retracement of the pullback. So if you're short somewhere around 40, this is one of those things where I would be looking actually to scale in to a trade like this. This is the time of the day where it's kind of dead, so I don't like to scale in around noon. I'm already moving my stop. You know, this is one of those things where it's not coming down with decent enough momentum, but we've already logged in at least 6 pips. I would probably exit with 5 pips on the first half, move my stop to break even. And now I pretty much are going to get out of the trade. It doesn't look like it's going to come down, so I would have probably had 3 or 4 pips on that trade. Now, because it's above our upper band, if you want to do a counter trend trade, first wave up, second wave up, it's very likely to reverse at this area. This wasn't at this time of the day. This is a good place to scale into a trade up here. As you can see, if you got into a trade, added to your trade, your entry would be somewhere around 58 right here. You're already up 6 pips. And this is a really slow dead time of the day. Notice we're using a range chart, so it's 5 pips per bar. If the market's dead, one of these bars might last 20-30 minutes. During active times, you can have 2 bars in 1 second, and that's why I like range charts. But I'm hoping that my bar-by-bar analysis will help you learn to manage your trades. Always assume the trade's not going to work. If you're up 5-6 pips in the trade and you don't feel good about it, exit half your trade, and when it hits your target or it's a few pips away, 3 to 5 pips away from it, and you know the momentum doesn't look like it's going to carry it, you know, get out of part of your trade. There's no shame in taking profits. Never let a trade that doesn't work turn into a big loss. So that's the key. You do that once, you can wipe your account out and you're done.